Hey guys, welcome back to McNallie Money, home of all things stock, investment, and personal finance related. Now this week I'm going to be taking a deep dive into my top two stocks that currently trade under $6. They've got a lot of similarities. They're both based out of BC, Canada. I'm currently a shareholder of both of these companies, and they've each had some big news articles come out in recent weeks. So I wanted to take a couple minutes, dive into each one of these companies, and let you know what I think of them moving forward. Now before we get into the video, please take a second to like and subscribe to the channel if you haven't already. Let me know in the comments section below what you think of each of these companies, if you currently hold shares, or if there's any other companies you'd like me to do a review on in coming weeks. Now without further ado, let's jump right in and get into the video. Okay guys, so as promised, today's video features a double header here. These are both Canadian stocks based out of BC. They're trading under $6 each, and I'm really excited about both of these companies because of a few recent news articles that just came out. So I wanted to talk about these in a little bit more detail. Now the first company here, very good food company. I have yet to put out a detailed video analysis of this company, but like I said, I felt like the timing on this was too good to pass up. Now this is a company that I've traded in the past, so I was actually into this name under $4. I wrote it up over $7 and then I sold out and took some profits. I recently started up another position here, which I'll show you in a second. It's traded down since I opened that position. It's now sitting just under $5.40, which I think is a steal of a deal for this company. So if you look at market cap here, you can see it's just under $460 million. And if you compare this to some of the other more established companies in this plant-based meat space, it's easy to see why I'm so excited about this company. So for example, Beyond Meat is trading up close to $10 billion. This one is 500 million Canadian, and the upside on this is just massive. So I wanted to take a second to talk about this. So if we jump over and take a look at my old position here, I got in mid-November, November 12th. I was able to get in at 390. Smaller position, I only had 125 shares at this time, and we'll talk about why in a second here. And I was actually able to get an 86% return on that. So $420 Canadian profit. I sold out November 30th, so I held this only a couple of weeks. And again, I'll speak to the timing on that in a second here, but I was very happy with that kind of swing trade situation. And since then, I've been watching Very Good Food extremely closely, and it's just now that I've started to build up this position again. Now if we jump over to my trading account, you can see I currently hold 200 shares of Very Good. I got in at $6.74. The current price is $5.39, which we just saw, so I'm actually down 20% on this position. So the market value on this one's about $1,100, representing about 2% of my portfolio. So I am definitely looking to build this in the upcoming week, and that's why I wanted to get this video out on Monday so that you guys have an advance notice of my plan for the week here. Now in terms of timing on this, I'll speak to what happened here a little bit in December. So this stock was actually on my radar in November. A couple buddies of mine started talking about this. It's based in Canada, and it was starting to get on some people's radar that I knew. Once I threw it on my watch list, it then began to start getting some hype on the YouTube community. So I decided to get in. I didn't really know a lot about the company, hence the small position. I was able to get in at that 390, and then it absolutely exploded here and just took off. So you can see by start of December, it was actually up over $9. I felt like that kind of mid $7 range was getting close to the top, so I decided to cash out of my position. I generally think of myself as a long-term investor, but if I see stocks like this just absolutely go on a tear, I'm never scared to take a little bit of profit off the table and wait for a pullback. And that's exactly what happened here. So you can see by the start of January, this company had pulled back all the way under $6 again. It then went on another run up to about $8.50 by mid-January, and it's continually pulled back since then. I kind of felt like that $6, $6.50 range was a good entry point. Obviously, it's gotten a little bit cheaper from there, which I think is an even better deal. But you do start to see some resistance here kind of at the $5.30, $5.25 level, which is why I think this is a great entry point for this company. Now, if you're unfamiliar with what the Very Good Food Company does, they actually now have two divisions. So they have butchers and a cheese division. So in terms of the butcher side of things, this is where the company actually started out. Very similar to like a Beyond Meat type of product. So it's a plant-based protein or meat alternative. But the thing that's cool with Very Good is they actually have a variety of meats that simulate all different types of meat products. So everything from charcuterie boards to ribs to bacon to sausages. So it really offers a wide array of meat alternatives or meat style products. And you can see on their website here, they actually sell these big box packages. So for $100, you can order one of these big boxes, and this is everything that's included. So you're gonna get 2 packs of burgers, smokin' burgers, British bangers, taco stuffers, barbecue jackfruit, 2 packs of ribs, and pepperoni. So you can see it really offers a wide array of products, and it's very affordable. This is in Canadian dollars. The products themselves are awesome. I think the quality and the taste is phenomenal. So it's really an exciting space to be in. But the big concern for me was the share price had gotten a little bit ahead of itself. Now, in terms of the recent articles that I mentioned in the intro here, there's 2 that come to mind that just came out in February. So number 1 is they actually just acquired this company called The Cultured Nut. And I said they had 2 divisions. One was based around butcher products and one was based around cheese. So The Cultured Nut is actually a plant-based cheese company. They offer all kinds of block-style cheeses, cream cheese, butter, and a number of other products in the development cycle. So very similar to the butcher side of things, but they're not going after simple products like cheese slices or grated cheese. They're actually going after kind of that artisan charcuterie style product. Now, The Cultured Nut currently sells their products at an average wholesale price of $4 per unit. And they expect to be able to ship 100,000 units per month in 2021. So that's about $400,000 of revenue, or about 4.8 million over the duration of the full fiscal year. Now moving into 2022, Very Good Food plans to ramp this even further and increase production, but this was really exciting for me to see. Now in terms of the dairy alternative market, it's forecasted to grow at 11% compound annual growth from 2020 to 2027, reaching over 44 billion US in total sales by 2027. So it's a huge addressable market, and I think Very Good is strategically aligned to take advantage of this, as they already have a great name, product, and footprint in the plant-based meat space. So Very Good paid $3 million for this company. And what was interesting to see is part of this was actually a share payment. So they gave them about 140,000 shares of Very Good Food at an average price, or a deemed price, of $7.15 Canadian. So to see it now trading in that $5.40 range is really exciting for me, because this acquisition just went through last month. Now the second article that got me really excited here was actually an increase in their distribution network with national retailers. So the first thing in this article that I wanted to point out is Quality Foods has now agreed to distribute Very Good Butcher brand products. So that's great to see. And they're also going to carry a number of different SKUs. So they're going to go after the Very Good burgers, smokin' burgers, taco stuffers, and the British bangers. So it's not like they're bringing in just one product. It's actually going to be a good assortment of their lineup. Now the other thing that's extremely exciting here is Sobeys has actually agreed to put Very Good Food products in their top 10 Safeway locations. So this is one of our main national retailers here in Canada. They're going to try it out for 60 days and see how it goes. But if it goes well, Sobeys actually has over 1,500 stores, 183 of which operate under the Safeway banner, and it's Canada's second largest retailer. So this is an absolutely massive opportunity for Very Good Food if this 60-day trial goes well and they want to start scaling this and ramping SKUs into more locations. Now those are the most recent articles, and those are really what prompted me to start building this position again. But I did want to take a step back here. This is from January 5th, and this talks about the company actually achieving some new production targets. So if you look into the article here, you can see they actually achieved an 82% capacity increase from October. So in just a few months, they're up over 80%, and they're now producing about 20,000 pounds per week of food. So if you extrapolate that out over a year, it's just over 1 million pounds of product that they're able to do on an annualized basis. The other thing that's exciting in here is they're now fulfilling over 1,800 e-commerce orders per week, which is a 100% increase from September. So not only are they getting more retail exposure, but they're actually increasing their e-commerce platform or their online sales tremendously as well. Now this is where it gets really interesting. So this article is from January 13th. So again, it's a couple months old, but if you recall, based on that annualized run rate, they're doing about 1 million pounds of product per year. And if you look into this article, that was actually pretty close to the capacity for their old production site. So their Victoria facility could only handle 1.4 million pounds per year. But as of January 11th, Very has now taken custody of this new Rupert facility, and they're able to do 37 million pounds of product annually. So this is a 2,700% increase. And I think this, in combination with their expanding retail footprint and online sales, is extremely hard to look past as an investor. So when I see these type of catalysts come into fruition in combination with the share price that's actually been dropping over the last couple of months, it's hard for me to turn a blind eye to this company, and that's why I feel like I need to start building this position immediately and take advantage of these huge developments. Now, in terms of price target, we already saw this company hit upwards of $9.50 a couple of months ago, so I definitely don't think $10 is out of the question in the immediate short term here. And if they're able to continue to ramp production with a facility that has a capacity of 37 million pounds, it's easy to see how that $5-10 billion market cap for this company is very realistic. So jumping back to their chart here, if the company was able to hit $5 billion of market cap, they'd be trading in kind of the $50 range. If they're able to get up to the $10 billion market cap, they'd be looking at about $100 per share. So that's 10 to 20x from current share price value. And the second company I wanted to talk about in this video is called the Valens Company. And I've actually done a number of videos on this company already. This is currently my largest holding in terms of any stock in all my portfolios combined. And I'll show you exactly how many shares of Valens I own in a second here. But this is one that I think is extremely under the radar. I've been doing a number of MJ analysis videos here on different companies operating in the States, Canada, online, brick and mortar, producers, extractors, all different sorts of companies in this space. And every video I do, I come back to Valens and think, wow, this company is extremely undervalued and extremely well positioned for massive growth in the next couple of years. So if you look at a 1 month chart here, you can see Valens is traded relatively flat. It's really, if you pull out to a 5 year, you can see it's actually trading well below its value a couple of years ago. So this was a $3, $4, $5 stock, and it's now pulled back all the way to this low $2 range. And I've just been loading the boat recently. Now, in terms of market cap, it's trading just under 330 million. It did have a really nice close here on Friday. It was up about 7%. If we look at a 1 month, you can see that it was trading under $1.70 here in March. So that was a great buying opportunity. I really feel like the sub $2 days are behind us for this company, but I'll jump into the portfolio and show you exactly what I'm holding currently. So I currently hold Valens in a number of my portfolios. This is my biggest position. So this one I have 5,240 shares. Average price of $285. So you can see I've been in this one for a while, and I'm actually down on the position. So I'm down about 22% overall. However, I've been averaging down over the last couple of months, and I think this one is going to pay off tremendously in the long run. So the price as of close we talked about was $220. I got in at $285, so I currently have a market value of $11,500 on this, with a book value of about $15K. Now, in my other personal account, I have an additional 825 shares. This one I got in at $1.82, so I'm actually up about 21% here. This one's got a market value of about $1,800. Book value of $15.01. And then if you watch my video disclosing my public account holdings, you can see I have an additional 750 shares in that account as well. So overall, Valens is definitely my biggest position or biggest holding out of all my stocks and accounts combined. And this is one that I could easily see getting up into the $10, $20, $30 per share price point in the next 5 to 10 years. So in terms of the articles that just recently came out about Valens here, I mentioned in the intro, there was a few articles for both of these companies that really sparked my interest. Valens is starting to aggressively enter custom manufacturing agreements. So this one's with Rubicon Organics. So this one gives Valens the opportunity to really flex its extraction capabilities and produce a number of MJ 2.0 products for Rubicon Organics portfolio moving forward. The next one here is actually a pre-roll manufacturing agreement, and this is with Experion Biotechnologies. So this is actually a partner of Life Foods, which Valens recently purchased, and we're going to talk about that in a second here. But this agreement actually sees Valens take control of full end-to-end pre-roll manufacturing and distribution for Experion. So between these two articles, you can see that companies are really starting to go to Valens for their expertise, whether it's on the production side of things or the extraction side of things, and put their trust in this company to bring their products to market in a high quality, high production type of situation. I personally think this is just the beginning. We've seen a number of these agreements and contracts over the last couple of years, and I think Valens now has the size and scale through their new K2 facility to start bringing these agreements on in a massive way moving forward. So the last article mentioned Experion was actually a partner of Life Foods, and Life Foods was actually recently the target of an acquisition for Valens. So they just closed on this one March 5th. I talked briefly about this in my last video related to Valens, but I think this opens up a massive door for this company moving forward. So for those of you who missed my last video, Life Foods is also based out of Kelowna, BC, so there's some synergies there in terms of geography. This company is really highly focused on edibles, including soft chews and chocolates. And if you take a look at the news release here talking about the $25 million acquisition, you can get a feel for the products that they produce. So here's some of the gummies, here's the chocolates. As we scroll through the article, you can see they've already got a production facility over 10,000 square feet in Kelowna as mentioned, and these are actually what some of their products look like. So they've already got products in market, they're very successful, they're very popular, and combining this company with Valens I think puts them in a phenomenal position to enter the edibles market in a big way. And you can see the scale of production has already ramped up. The CEO and the Valens Instagram page have been posting a lot of pictures of the gummies, of the chocolates, the production lines, and the packaging that they've been working on in recent weeks here. And I'm really excited as these products start to hit retail shelves and that sales volume starts to impact revenue for Valens overall. Now, for those of you that watch the channel closely, you know that I've been talking about a number of companies in this space recently. Edibles represents a massive portion of mature MJ markets. So if you look at places like Colorado and California, edibles is actually outpacing a lot of the flower pre-roll product themselves. And I think Valens is in such a good position to take advantage of these 2.0 and even 3.0 products like bath bombs, topicals, creams. There's really endless opportunity in the MJ space for derivative products, and Valens has the know-how, the equipment, the scale, and the network to really capitalize on this opportunity. So for those reasons, I'm extremely bullish on this company, and that's why it represents such a big portion of my total portfolio overall. So that's it for today's video, you guys. These are two companies that I'm really excited about. Again, they're both based in Canada. They're both relatively small companies with low market caps, trading under that $6 Canadian price point, which I think is really attractive. I feel like these are flying under the radar, and a lot of big institutional investors really are unaware of these companies at this point in time. And that gives retail investors like myself an opportunity to get in before the big players. Now, if you haven't already, please take a second to like the video, subscribe to the channel, and leave a comment in the section below if you're currently holding either one of these companies or if you're looking to build a position in the near future here. As always, if there's any other companies you want to put on my radar or me to do an analysis on, feel free to leave a comment in the section below. And on a final note, have a great rest of your day.